Hello, and welcome to the Milken Institute virtual session on the digitalization and future of asset management. Today's session is a collaboration of the Institute's Asia Center and Center for Financial Markets. The Asia Center extends the reach and impact of Milken Institute programs, events, and research in the Asia-Pacific region. The Center for Financial Markets conducts research and constructs programs designed to facilitate the smooth and efficient operation of financial markets. My name is Mike Pivovar, and I'm the Executive Director of the Center for Financial Markets. I have the pleasure of moderating our discussion today with an all-star lineup of panelists. Our first distinguished panelist is Mohit Joshi, President of Infosys Limited, a global leader in next-generation digital services and consulting. Infosys enables clients in more than 40 countries to navigate their digital transformation. Next, I'm pleased to welcome Madeline Dassoul, Co-Head of Technology at Wellington Management, a private independent investment management firm. Wellington manages over $1 trillion in assets for clients in more than 60 countries. Next, I'm delighted to welcome Lou Mayuri, Chief Operating Officer of State Street Corporation, a financial holding company with over $3 trillion in assets under management that provides investment servicing and investment management to clients in more than 100 countries. And last but certainly not least, following our panel discussion, Milken Institute Chairman Mike Milken will give closing remarks. Without further ado, let's go ahead and get started. Mohit, let's start with you and help frame our discussion here. Infosys provides consulting and information technology services to a wide range of industries. What specific trends do you see with respect to the use of technology in the asset management industry?
Sure, thank you, Mike, and it's wonderful to be here. So look, I think the industry itself has been changing quite dramatically over the past 10 years. And we suspect that the industry will see a lot of growth with additional assets being bought on board and new product being created. There are a number of themes that we see which are secular themes, across the board. I think one of these is the consolidation we're seeing in the industry. We're also seeing the entry of new kinds of investors. So whether it's more women investors or the emerging role of sovereign wealth funds from developing countries, or it is the rise of the millennial and the Gen Z investor, like we saw with the recent Robinhood and Reddit issues. But from a technology perspective, right, we feel that the role of technology in reshaping the asset management business for the next decade will be very significant. From my perspective, I try and class these across three broad themes, right? So the first theme for me is the industrialization of the business. Historically, asset management has been a sort of fairly boutique kind of a business, but over the past decade, we have seen this business get a lot more industrialized. And by industrialization, I mean a focus on the unit cost, but also a focus on productivity. And so this has relevance to themes like application simplification or the simplification of the landscape, move to more of a platform view of the world, a huge focus on automation, for instance. So automation and machine learning, focus on contact center and operations productivity, focus on straight-through processing. So especially in the middle and the back office, a huge amount of focus on driving up STP rates. Partly by simplification, partly by automation. We're also seeing a focus on the infrastructure transformation. So whether it's the use of a hybrid cloud or a public cloud from a cost perspective. So these are some of the things that we would put under the broad industrialization bucket. The second theme, for me is around the customer, right? Is focused around the customer and the increasing digitization of the business. And again, over here, I think the first key theme within digitization has been the focus on experience. I think asset managers are now focused on, on hyper personalization to a much greater degree. They're focused on advice. They're focused on making sure that customer journeys are intuitive. There's a huge focus on data, and the focus on data comes from an investing perspective as you're looking to manufacture new products or to get greater insight, but also from a customer experience perspective. So, how well do we truly understand the customer? What is their risk profile? What kind of products are they likely to be interested in? we're seeing a huge focus from a digitization perspective on securing the experience. So a focus on cybersecurity, for instance, across the board, because we've seen some high-profile either denial of service attacks or even ransomware attacks for asset managers, like for companies across all sectors. So I think the imperative to digitize, to be able to launch new products, to be able to launch them more quickly, to be able to incorporate the new offerings, whether it's the new financial assets coming in like Bitcoin into the offerings, I think is the second theme that will continue. And like the industrialization imperative, the digitization imperative is hugely, I mean, I think overwhelmingly impacted by technology. And the final piece is the transformation of the organization itself that we're seeing, right? Organizations across sectors are being transformed. This is true for the asset management business as well. If we think about this current, work from home or pandemic situation we're in, what will the office of the future look like? And again, this is, I think, linked to some themes that we saw pre-pandemic as well. How do we build a more agile and responsive organization, not just agile from a technology perspective or a software perspective only, but how do we build a more agile and responsive organization? How do we delayer the organization? How do we bring about a focus on learning? So, I think in the asset management industry, with the dramatic changes we've seen over the past decade, whether it's a move to passives or alternatives or digital assets, there is the need for individuals to be able to learn very quickly. And I think this has become almost part of the employment compact. So how do we build those digital tools, right, to enable people to learn effectively and to learn at a rapid pace? We're seeing a focus within the organizational transformation piece also on the new risk agenda, right, the risk and regulatory agenda. And again, as regulators give a lot more importance to systemic risks, they're looking at certain products. They're also looking at the data that you have, right? So I would put the risk and regulatory agenda also within the organizational transformation imperative. So that's how it's broadly shaping up. And for us, our role has been on the industrialization journey in helping organizations with their simplification, with their automation. On the digitization side, it's been helping them, map their customer experience journeys. We work with a very large asset manager, for instance, in completely transforming the experience for their RIAs, right? And building a marketing lab for the RIAs, which is an important relationship that asset managers are now looking to build. And obviously, from an organizational transformation perspective, whether it's agile, it's a hybrid working environment, or it's utilizing our learning platforms, not just to train our teams, but also to train the teams of our employees. I think these are some of the broad imperatives that we're seeing across the industry.
Yeah, thank you, Mohit. That was a very good way to sort of take a lot of different things that are going on and to classify them into three broad themes that I think are very helpful for the discussion here. What I'd like to do now is turn to our other panelists and give us some examples of how they're using technology in their firms within those three broad buckets that you mentioned: industrialization, digitization, and organizational transformation. So Madeline, let me start with you first. Can you give us some examples of what Wellington is doing in these areas?
Sure. So let me actually roll the clock back a little bit and give you a little bit of history so you can sort of see how technology has been utilized over the last 15, 20 years. And then I can talk about where we are now and give you some specific examples that touch on Mohit's themes. So if you roll the clock back 15, 20 years, I would say technology was really about data capture and storing data and then putting it in reports. We at Wellington had an HP 3000 when I joined 15 years ago, and I'm happy to say it's no longer in the building. But that was really, we were actually called Information Services. That was the name of the department. So that was kind of the first stage in the 15 to 20 year range. In my mind, the second stage, I would call it the transactional and resilient stage. So that was the point where we realized that all the different systems actually needed to get connected. that having people type something in here and then type something in there was really not the best use of our human capital, and that we could integrate the systems. And we were also growing at that time. So, we have the privilege of managing $1.3 trillion on behalf of our clients. And that has created a lot of volume for us to process. So that second stage was the transactional workflow and also resilience and performance stage. So I would think about it as really technology enabling the core processing of a growing environment. That's also the stage where we went from data centers that were just rooms in our buildings to a real sort of proper data center. And at that time, it's amazing how fast it changed, because at that time, we thought that was the answer. That was, going to be a permanent answer. So roll the clock forward 5 years later, we started our journey to move to the cloud. We're now fully on the cloud. We never imagined that in that 10-year span, we would move completely to a new data center and then all the way to the cloud. But the cloud, allows us to deploy technology extremely fast. The barrier to entry to getting, hardware and plugging it in, the time to market is really incredible compared to what it was in the past. So, I think that the next stage was the journey to AWS. And I would say the beginning of the data journey. You start to see this kind of more and more data coming through. At the beginning, it was through the conventional paths, right? More market data coming from market data vendors. I think now where we're at is that the world is so digitized that the amount of data and the different types of data, structured, unstructured, and how it all links together, and information that investors need to do to be able to have access to be able to understand the ecosystem is at a whole new level. So where we are now is a journey as a firm, because we have to keep adapting to stay ahead of the trends. A journey as a firm to really deeply, more profoundly embed technology in absolutely everything that we do. We get the best outcomes from technology when we have a great partnership between business and technology folks. And really what we see the future as is there will, every business person will be a technologist, and every technologist will be a business person. So our leaders are learning how to lead groups that are responsible for technology as well as business processes. And that is a journey of embedding technology strategy deeply part and parcel of the firm strategy. When you think about talent, we're growing blended talent that can work as business people, as technologists. It's a really great time to be in technology in asset management, because we can have this amplified ability to further the mission. And the mission is to get great outcomes for the clients and the end beneficiaries. And if you think about those end beneficiaries, they are pension fund holders, and they're people all over the world, millions of people. So that's a very exciting place to be at as a technologist, is to be able to have that kind of impact. I always say you can work on the next video game, or you can help make sure that we can allocate capital to the next biotech firm that's going to make the next vaccine. So if you have technical skills, before you go down the video game path, consider asset management. We're also a really, really collaborative firm, so that helps a lot as a technologist, because you just get to work very, very closely on the business problem. So a couple of examples to Mohit's themes. I spent a lot of my career in trading technology, so industrialization and trading and explosion in volumes is something that's been talked about in trading for a very long time. But I will tell you, when you roll the clock back, so we did decide that we would build our own trading system because we felt that it was a differentiator. So our buy versus build philosophy is that we custom build if it is different, if it's important to our clients and differentiated for us. And if not, we try to integrate vendor systems. So we were kind of a best of breed integration approach on one platform. So trading, when we first started to build, we had about, on a big day, about 75,000 trades, let's say. And you're talking about 2006, 2007, around that time frame. We hit 2008. We thought we had seen the volumes. the top volumes we would ever see, or we're at 150,000 trades a day. Last March, when we were trading amidst the volatile markets, we did over 1 million trades a day in the system that we built together as a team. And the team just has a huge amount of pride in really having been able to enable that scale, right? I mean, there is absolutely no way that our traders could have processed that in the old world. But more importantly, our traders are able to work with the PMs to further the mission for the clients and to really use their human intuition and expertise rather than be human machines who are just copying data from one place to place. There's no way, 50 people can type in over 1 million things in a trading day, right? So to me, trading is a great example of that. And the blending of skills and the blending of the teams started very early in trading. So we have great trading leaders who understand how to deploy technology in a very valuable way, in an efficient way, in an amplifying way. And we have great technologists who understand the trading business and have true passion for the investment business. So that would be one example on the industrialization. I couldn't agree more. Asset management has definitely gone to a point where service level agreements and volumes and performance and being available 24/7 around the world has become critical. So in the self-service sort of digitization space, I do agree that I think the experience that people have with their technology has changed. People expect everything to be as well designed as their iPhone these days, and we don't always have quite that experience. But I would also say that data has definitely exploded. And I had an aha moment a few years ago where I was sitting in a meeting and one of our PMs said to me, "Goodness, it's just so hard to get a hold of trade data." And I'm sitting there thinking, you just go to the database and get it, and I realized that the model where you go ask your IT person and they write a big query and get you some data was really not going to scale for us anymore because we were global, we were larger, the data was much more complex, that we were going to need to really put some data governance in place and get better at allowing people to get to it themselves, having tools so they can build upon it themselves and make sure that they understand exactly what that data is and importantly, what the quality of that data is. Analyzing a data set, if you don't understand what the definition is and who it's coming from and what they think is important about it, can take you down the wrong path. So, data is incredibly powerful, but you need to know exactly what it is that you're looking at. So we have a lot of tools now around helping everyone throughout the chain, clients, investors, traders, operations folks, business developers, get access to data themselves, be able to do enrichment and aggregation and run some analytics and modeling. And that's really the future, I would say, in the data space is we need to evolve how we do enterprise data management to the point where we're really nimble and fast at bringing in all kinds of data, but not just bringing it in, knowing what it is, knowing how good it is, and being able and having the consumers have the skill to efficiently get the information that they want out of it. So data is definitely a super important trend, and we're actually hiring our first chief data officer so that we have someone who's really going to focus specifically on the data strategy to keep moving that forward and keep improving on it. So, the organizational imperatives that you talked about, again, I think for us, it's really this blending of skills and bringing people together. A lot of the more junior folks come with programming skills these days, and so it's really about marrying those skills with our business to make sure that we're doing everything we can to help our clients and investors have the impact on the end beneficiaries that we want.
Great, thank you, Madeline. Lots of good information. I must admit, I did not think HP 3000 would come up in this discussion, but thanks for doing that. Lots of great stuff from you, Lou. I want to get your perspective on what State Street's doing in your experience in these three areas too.
Yeah, let me just give folks some framing so that you can understand our seat. So if you know a little bit about us, we basically have 34 to 36 trillion of assets under servicing. So we serve, let's just call it roughly 10 to depending on the day, 13, 14% of the world's assets. So it's a lot of volume. You think about what Madeline said about March, that was an interesting time for us. We saw 20 to 30 times the volumes that we normally see across the planet. So scale is important to us. I think what Mohit said up front, which is there are headwinds for our customers. So we serve the institutional asset managers, the Wellingtons, we serve hedge funds, private equity firms, and beneficial owners, official institutions and pension plans. And the reality is over the last, I don't know, let's say 10 plus years, there's just been a lot of headwinds, the shift from active to passive and people trying to figure out what that allocation looks like, regulatory costs. So my version of the industrialization has always been something like this. It's like, and I think Mohit says it more eloquently than I do, but we need to help change the way we provide our services and the way we work. We also have to help our customers in the way they work because we provide services across the whole spectrum in the front office, in trading and compliance, and record keeping, and back office, which is custody and accounting. So we've got this big portfolio of capabilities that we provide. And the point I'm trying to make, I think what Mohit's trying to make, is that you can't keep operating it that way because it's so much changing. And I would say that about 5 or 6 years ago, we started off with trying to figure out how to lower our cost, right? That was the word we used. And that was the wrong word. I've now substituted that with the word productivity, which I'll get to. But the goal was, how do we do this more efficiently and effectively? How do we do more with less? These were the terms that we used. And I'll zoom into one little service area. So for mutual funds, think about mutual funds here in the US, we are 40+% of that market. We're a big part of the ETF market too. I don't know, close to 50% of all ETFs are serviced at State Street. So it's a big swath of capabilities. And it's a bunch of things that we do. And when I started off in the industry, and I won't tell you the year because I'll date myself, but you can tell from the grayness, maybe where I am age-wise, we had fund accountants, and fund accountants would take all the cash flows and the prices of a fund every single day in a general ledger and try to figure out what is the net asset value of this fund today so people can redeem and purchase their shares, which we all do in our mutual funds. And that when I started off many moons ago, as Madeline said, you type stuff over here and then you type stuff over there. And then we link those things so that it moved things along through the system. So we've been striking NAVs, net asset values, largely the same way for, 20 plus years. And so we set off about 10 years ago and said, if people can build driverless cars, could we build a driverless NAV? Is there a way to automatically develop a NAV and empower our fund accountants to do more with less, increase the number of funds that they serve per fund accountant? And we built something called the driverless NAV, and it worked pretty well. And that's been in our, what we call production now for like 5 or 6 years. What we realized is that we hit this wall of productivity. We couldn't push it any further because the reality is some of these funds are very complex. They traffic in derivatives, which are complex instruments, and there's only so much you can automate. So I had this group, and I say this, and they know I say this. I had this group in Austin, machine learning team that came out of IBM, and I love to say that they didn't know the difference between a bond or a bathtub. And we had them separate for a lot of times. And then to Madeline's point, we said, you guys have to come over here and learn what fund accountants do from beginning to end and figure out how we can reimagine, how we can provide more productivity. And we moved into productivity, Mike, because it implies quality. I think one thing we missed early on in this ambition to lower costs was the quality of service was missing. So yes, you can lower costs. You can move things to places where it's cheaper. You can try to do more with less, but quality is missed. And I think the thing we love about productivity is that implies doing it also at a very high level of quality. So long story short, we took a team of machine learning folks, quants, and one thing that they noticed was, and this actually helped us during the crisis, was in the end, fund accountants are trying to assess reasonability in the NAV. Is this a reasonable price given what happened? And they can do lots of reconciliation to do that. So I'm going to butcher what they do, but I'll give you the summary version of it. So they built models. Every fund has a benchmark, right? Madeline would tell you, every one of their funds has a benchmark, possibly more benchmarks. So they said, well, if I could take the fund and I could regress its performance over years with that benchmark, and then I can find other benchmarks that are similar. So if I'm benchmarked to the S&P 500, but I find, the MSCI World is also another proxy, I'll also regress that. And the model will learn, given pricing movements in the market every day, what the price of the fund should be. What is that range that it should fall into to give that signal to the fund accountant? And we've done this, and we've done it now. We're rolling it out. It takes about 6 months for the model to learn. And what we're finding is it actually is improving productivity of our fund accountants by not like a 5 or a 10 handle, by 25 or 30%. And what it does, as soon as the market closes at 4 o'clock, the models run and say the price of the fund, given no anomalous things that happen, like no mistakes or big cash flows that come in and out of the fund, but the price of the fund should be in this range. So as the driverless nav runs through it, if the price lands in that zone, because the model is pretty accurate, the fund accountant knows to say, okay, let that go through, it's of quality. So we're really excited about things like this. And then the big question is, where else can you take these ideas, to Madeline's point? And the hardest part of this whole thing, I find, is how do you teach this, and you said it, Madeline, how do you teach the technologists a little bit about the business? How do you teach the business a little bit about how to imagine the technology so that you can sort of have this magic take place? And so it's learning, it's getting the right people. I think that's probably one of the hardest parts that I've seen, because you'll get incremental improvement, but this is actually a step change for us. So that's one example of what we've done in the industrialization and improving the way we work. We have other things that we're doing to help our customers. Mohit said it, we're building a platform called Alpha. We believe that and Madeline said it, we sort of had these things in the front office, then we had these things in the middle office, and we had these in the back office, and we glued them together. But the reality is they use different data, they use different tech, they talk to each other through APIs, but there's still a lot of friction. So one of the things that we're building is a platform for the industry, which I won't go into too much detail right now. But I think the thing that we're also doing is around digitalization. And if I could talk a little bit about what we've done with, people use the term big data. I think this is actually interesting. And the story is interesting. So I'm sorry to go back a little bit, but 20 years ago, we have a markets business. And so we also make markets in foreign exchange, and we help our customers with lending and trading. So, and we're not a big universal bank. I call us the little trust bank from Boston. And so why would anybody trade with us? I don't have all these really smart people that go to wonderful schools and have all this research they publish every day. So the folks well before me decided, well, we're this custodian. We sit on 10% of the world's assets. Is there anything we can glean from this data? And this is 20 years ago, before anyone talked about big data. And so the team kicked off, and they were smart enough to say, let's locate ourselves in Cambridge, Massachusetts. Let's bring academics in from Harvard and MIT to help us think about this from an academic and a rigor standpoint. But could we provide signals and indicators to people that might be interesting? So 20 years ago, as you can imagine, you took our custody data, which is 10, 12% of the world's assets. We don't share customers. We don't share securities that they're purchasing. But what we can tell folks every single day is where are capital flows going? Where are hedge funds moving their capital? What asset classes, which countries? We're 40 Act institutional. And that's interesting for people in the markets, because you want to know if flow is happening based on macroeconomic trends. And that was interesting. And I call that big data, right? Take existing information, turning into new insights. But in the last 10 years, this idea of data science has moved in. In fact, the researchers used to call themselves researchers. Now, if you go to Cambridge in our offices, they're all data scientists, because they're looking at unstructured data. They're working with this information set and I'll go into it in more detail later. But they're getting this unstructured data, turning it into investment signals for traders and investment managers to look at trends in the industry, which is really interesting in how that's evolved. So we provide that research to our customers who trade with us, as an example. So let me stop there, and I touched on a couple of points.
Great, thanks, Lou. Lots to chew on there. I mean, I think a couple of common themes here, right? I mean, the only constant is change. Things are changing rapidly. We go from an HP 3000 to driverless navs now. So who knew we would get there? The other one is from a learning and workforce development and training perspective, is that anyone looking to get in the asset management industry or technology industry, you're not going to be pigeonholed in one job. You have to have the skills to do that. And I know Mohit, your firm, does a lot in that space. But Mohit, I'd actually like to turn the topic to another topic that whenever we at the Milken Institute hold convenings with asset managers and asset owners, invariably within the first 5 minutes of the conversation, the topic of ESG, environmental social governance, or sustainability comes up. And there's sort of two dimensions to this. One, in terms of asset managers managing their own firm themselves with sustainability principles, but then also being responsive to their clients. As Madeline mentioned, there's a lot of, they have a fiduciary duty to their clients, and there's a lot of interest from their clients in investing in ESG. So, and then those two things, how is Infosys helping asset management firms use technology in the area of sustainability, or how could it be more useful to them?
Sure, thanks, Mike. So as the saying goes, first you have to eat your own dog food or drink your own champagne. So from an ESG perspective, for us, when we look at at what we're asking our clients to do, the question is, what are we doing ourselves? So from an environmental perspective, I'm very proud of the fact and happy to tell you that Infosys is already carbon neutral in 2030 for our core supply chain and for our core operations across scope 1, 2, and 3 emissions, right? Which is quite remarkable. We're one of the first companies in the world to be carbon neutral 30 years ahead of the Paris goals. And the way we've done this is, obviously this has been going on for a very long time before this became fashionable. Investing in solar generation capacity, wastewater recycling, smart buildings. And this has helped us become carbon neutral without buying a bunch of credits, right? Because that is the cheap way to become, or the easy way to become carbon neutral, is you just buy a lot of offset credits. Where we've had to use credits, what we've done is we've invested in communities. So investing in 100,000 families so that they can use solar power for home cooking, or they can use biogas generated plants for electricity generation, right? So that's on the environmental piece, what we've done. From a social perspective, we've always thought of our company's mission as being around education, being around technology, but also being around education, because education is what is driving technology. So we've built up plans to train 10 million people across the world in digital skills, through learning in a classroom type setting, through learning through internships, but also through building these gigantic, platforms on which you can learn, you can test yourself, you can engage in communities by building communities, and it can help train you for a job. So that's the social piece of our agenda, creating 10 million digitally literate people over the next few years. And then on the governance piece, we always prided ourselves on our governance, a completely independent board, independent chair, very high levels of disclosure. But we are now very focused on the empowerment of the women in our workforce. So historically, we've always had, if I look at the fresh intake of engineers within Infosys, and we do take in about 25 to 30,000 people per year, about half of our intake is women engineers, right? Which is, I believe, world beating. We are now very focused on making sure that we have the same levels of representation, in our leadership team as well. And in a very bizarre way, the pandemic will really help us, because we will lose a lot fewer of our middle rung women employees, because we can now afford to be a lot more flexible about working. So that's how we are operating our own ESG agenda. Now, when it comes to our clients, right, specifically when it comes to asset managers, I think there's a couple of things. One is, I'm just delighted with the fact that this industry has been so engaged, specifically in the climate debate, right? I mean, I'm actually very surprised, because everybody thought the financial services sector would go into this kicking and screaming and talking about, oh, what about lost returns and everything else. Apart from my day job at Infosys, I'm also a non-executive director at Aviva PLC, the large insurer. And Aviva just yesterday signed on to becoming carbon neutral in 2040, which I believe is really impressive for such a gigantic insurer and asset manager. And there I feel the opportunities across a whole range of things, right? The first is, how to become carbon neutral for your core operations and your core supply chain. You can use a lot more services from people like us who are already carbon neutral, and that helps you in your own carbon accounting. The second piece is, the big opportunity, it's a huge opportunity. Transition to net zero is a gigantic opportunity across industries, right? Whether it's the energy business that everybody talks about, or automotive, but also for consumer goods, also for, travel and hospitality. How do asset managers, and I realize the fact that asset managers are really not private equity firms, right? There's a level of operational control that you have in your, in the companies you've invested in. But there needs to be a level of what is called engagement with teeth, right? Which is that you are engaging, but you're also suggesting ways in which your portfolio companies can become green. And there we've created a host of solutions to reduce energy intensity, to reduce resource intensity, to reduce energy and resource. You get to reduce carbon footprint. So what are solutions specific to the automobile industry to reduce waste? What are the solutions for for the hospitality industry to embrace digital more effectively? So these are the solutions that we've created that help from a transition perspective. And the third piece is around the measurement of ESG itself. I believe that whoever creates an effective ESG index, which can accurately measure the carbon intensity of company A versus company B, is going to create the next Bloomberg, right? It is a gigantic opportunity because data in this space is fragmented and honestly a little bit suspect. So that is the big opportunity we're working with many of our clients on is how do they think about their ESG indexes? How do they build superior data sources? When we look at the climate disclosures, for instance, there are a lot of conceptual questions that need to be solved. What is the carbon intensity of a U.S. government treasury versus a German Bund, right? How do you measure that? So these are the three areas I think we can help. On the transition piece, on the data and the measurement pieces, right? But finally, I'll say that this is also a gigantic opportunity for the asset management industry because this is obviously going to engage new audience. It's going to pull in a lot of money, and this will result in the creation of brand new products and expand the industry hugely. Right? There are very few green assets available, so a lot of money needs to go into the creation of these new industries and these new assets. So it's the whole ESG piece. And I realize I've spent a lot of time talking about the E piece, but the entire thing is really going to transform asset managers into purpose-driven companies a lot more, and I believe it will be transformation for the industry.
Thank you, Mohit. So, right, lots of interests, lots of money, lots of challenges, right, that technology can help with to provide, as you point out, lots of opportunities in this space. So Madeline, let me hear your perspective. What's Wellington doing in the use of technology in your sustainability efforts, both for your firm and then also to being responsive for your clients?
So let me start with just stating, which I think is pretty obvious for people in the asset management industry, that ESG has been around for a long time, but we are definitely seeing this rapid increase in interest. If you look at environment, social, and governance, there was probably more weight on governance a few years ago. Now there's a lot of focus on environment, and we expect social to actually be the third wave of interest and data and analytics and tools and tool requirements. So Wellington just joined the Net Zero Asset Manager Initiative as a founding member, and that signs us up to partner with our clients to achieve the net zero emissions goal as an asset manager by 2050. So that's really exciting. We're very proud of that. And in terms of the technology, so I would say I kind of think about it in two pieces, right? You have your research side of the house. And traditionally, ESG ratings and the ESG research that was done by the analysts was very much on the research side and the research providing input to investors. So if you look at what we have now with this acceleration, we've had for a few years now a partnership with the Woodwell Climate Science Research Group. And so we built a tool called CIRA, which I'm pretty sure isn't going to compete with Bloomberg, but stands for Climate Exposure Risk Application. And it actually takes the data from climate science and links it to security data at a very granular level. So you can say, okay, if there is a risk of drought or fire or flood that's very high in this geography, okay, well, this company has headquarters there or manufacture plants there or some exposure in their process to that. So that's a really important tool to help in the research space and for investors to understand what the risk looks like that climate change is bringing to the portfolios and to the companies in the portfolios. So the other piece I would say on the research side is what we call transition risk. So it's taking a look at the company's ability to adapt to this changing world, right? So, can I meet my sustainability goals? What's going to happen when taxes change? What's going to happen when regulations enforce certain standards to my manufacturing process or whatever I'm doing? So the company's ability to adapt and flex to the new requirements of the environment. The research piece, I think what's happening now that we're seeing is, so SFDR is coming along, so there are some new requirements to get some more standard data from the outside to be able to put some assessment on your funds and on your portfolios of where they stand from an ESG point of view. What I think we're finding is that to Mohit's point, there's a lot of work to be done around what's the methodology and is it consistent? And there are gaps in coverage, right? So what do you do for structured products or derivatives? So there's a lot of work ahead of us for that to really be kind of a full suite that's extremely well understood. It reminds me a little bit of trade cost analytics in terms of the evolution, right? In the early days of trade cost analytics, you had somewhat simplistic and very inconsistent information. And as the years have gone by, it's much more complex. And also much more standardized, and you can look at the more sophisticated analytics, and you can also look at ones that are going to be calculated exactly the same way across the entire industry, so that you can look on a peer basis. The CIRA tool I would highlight, and then we are also, so now client reports and regulatory needs are going to push us towards putting all of that data in more spaces in more spots in our infrastructure. And I think we're also really more deeply throughout the flow integrating this information. So you're seeing the portfolio construction process, getting a lot of overlays of sustainability data and ESG data more deeply throughout the workflows and processes.
Well, thanks, Madeline. So as a former academic and somebody who used to do market microstructure research and trade cost analytics, I think that's a very apt analogy, right? That went very quickly from rudimentary measures to getting more data. So it was an iterative process, getting more data, using technology, coming up with new things, those sorts of things. So Lou, let me end with you here before we get Mike Milken to come in and give his closing remarks on this. Tell us about State Street's experience in ESG and sustainability efforts, both again for your own firm and on behalf of your clients.
Yeah, so I'll go quickly here. I think from a firm perspective, we're the ones that dropped the Fearless Girl down in Wall Street and on International Women's Day, which is coming up next week. So that really kicked off a whole bunch of activity, really putting the mirror up to ourselves and saying, are we holding ourselves to that standard? So today our lead director of our board is a female. We've got many executives, and I'm going to miss a few, but our head of operations, our head of our trading business, my chief information security officer. So we've done a really good job of focusing on diversity. Our next focus is on Black and Latinx, and we've made a commitment to ourselves that we're going to triple the amount of executives in our firm. So you'll see us make that commitment also, very similar to the way we did with diversity. When I think about the services that so that's the firm itself. We believe in this. Our belief, by the way, is this should be in everything that we do, meaning we don't think of this as an investment strategy. We don't think of it as a product. It should be in everything that we do. So let me just quickly run up the stack. And Madeline talked a little bit about it. So to help our customers, we're providing measurement capabilities. So we can clearly do performance measurement. We can show you your ESG scores. We can work with the data providers. We have methodologies that were developed with George Seraphim and State Street Global Advisors, our own asset manager, called the R Factor, that looks at material factors across different asset classes. So we have that. We're providing regulatory reporting in SFDR. We provide compliance. We have scenario analysis tools. So as you're in portfolio construction, and these are tools as well as tools as a service. So if you want to decarbonize your portfolio or move around with different scenarios around climate change, it'll show you the impact on the portfolio from a risk perspective. Our own credit group, we're a bank, right? So we lend money. We're providing ESG scores to the leveraged loan business that we have, which is lending to middle market companies around the world, largely in Europe and in the US. So we provide ESG scores as to how do we want to allocate our credit risk out there. And then SSGA is our advisors, our investment team. It's the third largest asset manager in the world. And again, we're a passive manager, but we've taken on the stewardship role through proxy voting, working with the companies through engagement, through thought leadership, working with them on ESG issues, certainly hoping that and encouraging them to have diversity on their boards, tenure on their boards. So we really incorporate this in everything we do, Mike, from the beginning, the back office, all the way to the front office, and then ourselves and how we operate. So that's how we think about ESG.
Great, thanks, Lou. And in the remaining time here, I'd like to turn it over to our chairman, Mike Milken, who is joining us to give his closing thoughts. Mike, before I turn it over to you, I don't know if you had a chance to listen to the entire session, but we've had some really great discussions on a number of different topics. You know, Mohit started us off talking about the way he thinks about technology fits into three broad themes in terms of the way that his clients are using technology. The first being industrialization, not only getting operational costs down, but as Lou pointed out, getting productivity up. Digitization, using data more efficiently and effectively to help service your clients, as Madeline pointed out, and then organizational transformation. So not only using technology to improve existing processes or the existing customer experience, but actually transforming, the organization. And then finally, we talked about the use of technology in this big wave of interest in sustainability and ESG, mostly driven from investor demands, but also the firms themselves being interested in this. Mike, I'd like to get your thoughts on any or all of these topics. Oh, and then one other thing that Mike, that's close to your heart, is we talked a little bit about the importance of training and workforce development in these issues. Technology is not a separate function from finance anymore. To the extent that we want to have firms that use technology in a way to really transform their organization, you need to have people who are trained in both. And so that's an imperative not only for the organization, but for the people that want to get jobs in this area. So Mike, let me turn it over to you for your thoughts.
Thank you, Mike. And I did listen to the entire panel. It was great. And I remember 5 decades ago, my visits to Wellington or to State Street. And I might reflect a little bit about that in my remarks. And I just want to reiterate how lucky we are in this country that Infosys has made the commitment in many ways to become maybe the leading educational force, particularly for those students from community colleges and others, with their commitment to the 25 to 30,000 people a year that are entering into the system, and their ability to leverage this skill that they've developed to numerous organizations throughout the country. So I just want to once again thank them for their commitment and their willingness to make this investment in the United States, not just around the world. So thank you very much for that. All right, so I thought in 10 minutes I'd try to provide a 50 to 60 year history reflection. And as I listened to the discussion of the computers, we were the very first firm to roll the extremely dynamic, sophisticated IBM 370 onto our trading floor. So if you thought those were archaic, I had moved into the modern age by moving from a 360 to a 370. And I think we need to reflect on what has occurred and where are we going. So I first want to go to the challenge of the free enterprise system. Due to income equality, other issues in the United States and other countries around the world, heavily related to education and asset versus labor issues, there are enormous challenges every single day to the free enterprise system. And I think what you discussed here is essential to help that system meet the needs of society. Because in a democracy, the majority can vote. And so to us, and that is one of the reasons for the last 8 years, we've been building this Center for Advancing the American Dream in Washington, D.C. Number 2, what we've seen here through Robinhood, other mechanisms that a number of people in government have recalled the gamification of investing. And Mike P. of R wrote an op-ed for the Wall Street Journal and will be testifying in the Senate hearings next week. But this is an important element. I go to every baseball park in North America to raise money for cancer research, and this will be my 25th year. But the realization that there's more people playing each other online in games, video games, than go to every single baseball game in America, all playoffs, preseason, etc., is with us. How people are going to learn. We could call gamification, we could call simulation, but one thing we're sure of, all money managers of the size and sophistication of Wellington and the enormous responsibilities that State Street have eventually want people to, at least no different than an airline pilot, go into these simulations, see what you would have done and what the results would be. And that is what technology has brought us, an opportunity. It has also given us the chance to allow John Q. Public, no matter what their socioeconomic status, to go on and on a paper basis, invest, understand it, play in a simulation game. And so this is another important step, I believe, in the expansion of the free enterprise systems at all socioeconomic levels. Third, the realization that the most valuable financial institution in the world today, at this moment, is Visa. And the third most is PayPal. And the realization that PayPal's value increased more in 2020 than Goldman Sachs or Citibank are worth combined only underlines the movement of fintech and how people are going to be interacting digitally with this experience. And what the relationship is with Wellington or State Street or with others will be more digital, and the need for this education and access in every element, the organizational element, the data element, and the industrialization, but also in making this interface easy to use and easy to understand, and providing knowledge is going to be increasingly essential in the world we live in. The vast majority of people in the world have never walked into a bank, okay, and never had the luxury of sitting in a brokerage firm office and watching the tape go by today, but will engage with the financial system on their devices. There are 5 elements in this system. Banking. This will be their bank. Borrowing money and having loans. This will be their access. Investing. This will be their access. Insurance. This will be their access, and so on. And so there is, in my opinion, no choice. Now, if we look at this on an historical basis, in the late 70s and early 80s, we issued index securities into silver, gold, but we also indexed them into volume on the New York Stock Exchange. And we had financed taking Oppenheimer private, the firm, as a brokerage investment banking firm. And in doing so, issued a bond indexed into the New York Stock Exchange volume. Once again, listening to the volume that we thought had peaked at 75,000 internally or 150 going to 1 million, I can promise you that the interest rate, if that bond had not been repurchased shortly thereafter, would be over 1,000% today. And then our projection and simulation of what volume could be was in a whole different world, with the majority of trades occurring not on exchanges. today. And even the ownership of the major exchanges by companies located that are really technology firms, located no longer in money centers such as New York. So to me, what we've talked about is not only essential for the growth of your own organizations, but in my opinion is essential for the perpetuation of the free enterprise system and meeting the needs of society. There was a day in the late 70s or early 80s, if you wanted what might have been extensive risk capital, you had to come to Los Angeles to a meeting at 4 or 4:30 in the morning or late at night to come and visit us. But the democratization of capital to tens of thousands of points of light around the world has changed that. For many students today, they can't understand in the past why there was a concentration of risk capital when you could have called any of 100 venture capital firms that did not exist 30 years ago. So to me, this discussion today is far more important than just what individual organizations are doing in digitization or industrializing or how you're going to structure your organizations. In the long run, your organizations will, in many ways, provide the capital for companies to grow directly with individuals intersecting with you. Wellington, for example, if I would have gone and suggested to them in 1975 that there was a real opportunity in the private equity market, not the public markets, and you should devote a large percentage of your capital, they weren't excited about my high yield ideas, and I assure you they would not have been excited about those ideas. But Wellington is playing an important role today in the pre-IPO process for numerous companies and with a third-party endorsement prior to IPO. Upward mobility that the American dream defines is what Infosys has promised with coming to the United States. And you don't have to be at MIT or Caltech. You could have been at a community college, and they will make an investment in trading with you. When 70% of students in high school think the stock market is rigged for people on, quote, Wall Street, we have a challenge in front of us. And the best way to answer that challenge is education, knowledge, and interaction. It would have been unheard of, and I participated in 1974 in the very first simulations at Wharton with Professor Mader and others for students at the very beginning. They would be very rudimentary on today's systems that are available to us. But the growth and the speed and the reduction of data storage to 1 billionth of the cost, and the fact that there are 9 billion of these on the planet now, more than one for every person, allows us to do that. And the hearings that occurred in Maxine Waters' Finance Committee in the House are essential. That when you listen to many of the questions to explain the understanding of these markets. We might remember in closing in the financial crisis that in many of these hearings, and Mike might have been SEC commissioner at the time or in the Senate Banking Committee, the minute they rated the United States AA or AA plus instead of AAA, they wanted to talk to those government officials, and they were surprised that the rating agencies weren't government agencies at the time. Understanding trading today, it seems to be backwards. Robinhood's shutting down to make sure it could make deliveries, etc., and denying for a day or two people to buy GameStop at $480 a share saved them money, did not cause them to lose money. But this education has to come from the industry, and I would cite one example is the video game industry in closing. They set up their own rating systems so that the government did not. And so what would have been R for movies or other types of things. And it's important that the financial system today provide the education and knowledge and opportunity to learn through simulation. And I think this meeting is a step in the right direction. The role of technology at State Street or Wellington, neither of those companies today could operate if it wasn't for the use of technology. And we've got to find a way to get it to all elements of the socio-economic scale. So one, it was an honor to be able to listen to the discussion today. It's amazing to see the evolution of these companies I visited 50 years ago, and how archaic. We rolled out, excuse me, the first computer systems and data storage systems. And today, how much more power is on one little device than existed in our, quote, supercomputers, the 360s and the 370s. So, Mike, thank you for letting me join you.
Sure. Yeah, thank you, Mike, for those great insights. Every time you talk, I learn something new. So I also want to thank our distinguished panelists for giving us the benefit of their expertise. Mohit Joshi from Infosys Limited, Madeline DeSuel from Wellington Management, and Lou Mayuri from State Street Corporation. Finally, a quick shout out to my Milken Institute colleagues, especially my colleagues in the Asia Center who worked behind the scenes to make today's session a success. To learn more about the Asia Center, the Center for Financial Markets, or the Milken Center for Advancing the American Dream that Mike talked about, teaching people the importance of preserving the free enterprise system, as well as all of the events, programs, and research of the Milken Institute, please visit our website at milkeninstitute.org. Thank you all. Stay safe and be well.
Bye-bye.
Thank you, Mike. Thank you, Mike. Thanks, Madeline. Thanks, Lou.